What's up, outliers? What's up, apes? I hope everybody's having an awesome weekend. Thanks for coming to hang out. Game plan for today is actually to take a look at GameStop. I've had a couple questions about my current position. So, well, at least the sample position that I share with you guys. For those that don't know, the way that I do it and kind of protect confidentiality and stuff is I have like my main portfolio and then I kind of like scale things out of it for contextual conversations. So that is what we'll take a look at today. And I think there's a really interesting series of behavior going on, especially with GameStop, but also the broader market. That's why I want to start here from the broader market, and then we'll double click into GameStop and some of the conversation points there. Across the board, the broad market right now is going through a pullback. If that extends, we can find ourselves very quickly in a correction, which is defined as about 10% from near-term highs into lows. And right now, I can't see the number, but I'm guessing it's like half of that, maybe a little over half of that. The market, as a reminder, spends the majority of its time within 5% of all-time highs. So this right now is the early stages of something that may or may not get worse. As always, nobody knows, and I don't pretend to know, and anybody else that pretends to know is a fucking liar. But we do have an ability to create probabilistic assumptions. And actually, a couple weeks ago, I think it's 1 or 2 weeks ago, we were having a conversation and I was explaining that my current probabilistic assumption is favoring near-term downside and still long-term bullish. And thus, I still feel that general way. Until we see some of these broader things abate, right? We need to see vol come down. We need to see the indices stabilize, which right now they really haven't. They're still, I don't want to call it free fall because that's dramatic, but they've unwound pretty quickly and they continue lower. So until that actually starts to normalize, then yeah. Now, relevant to GameStop is actually not crude oil, but it's Bitcoin. Bitcoin, this is nasty. What's going on there, I think you can construe it a bunch of different ways, but we'll take a quick look at it because I think the issue is with Bitcoin, as we go through this broader drop, like nobody knows why. There really hasn't been a clear, logical discussion that I've seen, at least, that would lead me to believe like, oh yeah, okay, I can clearly understand the catalyst here. If we take a look at this move so far, I'm not even using the low. We'll go to the low just to see the total range, I guess. This is a 36% drop in less than 2 months. That is an aggressive bear market. That's not like a small bear market. That is an aggressive bear market. I've seen a lot of different commentary about why this may or may not be, but I've not seen anything that I would consider to be kind of like an accepted depiction of this catalyst. So my first question to you all in the chat is, what do you think is causing the drop in Bitcoin? Do you think it's just people want to unwind and get out of it? Do you think that there is an issue with the halving? Do you think that it's institutional sponsorship unwinding? What are your thoughts? And again, the reason why this pertains to GameStop is because Bitcoin is a key part now of GameStop's balance sheet. And on top of that, this is one of the risks that we reviewed together on the stream of holding something like Bitcoin, that this kind of thing can happen. But let's see what we got. We got Reese, we got Brain says, yo, sorry if I was being snarky on the stream last night. I honestly don't even remember anything registering any close to that. So not sure. I don't even know what that pertains to, but completely nothing registered on my end. Kali Luca, good to see you. Lawrence says, can we talk about GameStop trade GameStop's trade? Anything on December 6th? Could you clarify? When you GameStop's trade? What do you mean? Reese says, I've never known why Bitcoin does anything. Super risk on asset. Yeah, I mean, the thing is like some of the behavior in Bitcoin is trackable, right? Like there are liquidity effects through stuff like the halving. There are things like being added to indices, futures starting to trade on Bitcoin. Like there are clear effects that we can identify. Typically speaking, when we have something that's down like over 30% in 2 months, that's a different bag. And like normally there would have to be some sort of structural catalyst. A good example of a structural catalyst could be futures on Bitcoin are going away. But again, this isn't what's happening. I'm just saying like these kinds of things. Or the big banks have moved to block Bitcoin as a legitimate payment structure or not having it on their balance sheets or some sort of government regulation on Bitcoin and the way it fundamentally behaves. Like that kind of stuff can cause this sort of movement. I guess the trick here is that those things haven't happened and it's still exhibiting this kind of movement. That's what makes it so unique. And this is, again, one of the long-term tricks when it comes to something like Bitcoin is it does move like this. It's not always, it's not necessarily frequent. But again, if we go back to this most recent reference range, that was 32% over 54 trading days. So it's like not that crazy. Reggie says Bitcoin seems to be following its 4-year cycle, maybe 3 years trending, 1 year down. Let's take a look. Let's test the hypothesis. Let's go to 4 years daily. I am unsure because if we apply that 4-year cycle concept, then this looks negative to me. Then this looks positive. Then negative, positive, big negative. This is a deep ass pullback, though, I'll tell you that. Eric says market makers need liquidity. Bitcoin is a Ponzi scheme, basically useless crypto transactions wise. I mean, it's objectively not true. That's you could not like it. It's okay to not like Bitcoin or not believe in it, but like that's objectively not true. It's not so much a Ponzi scheme, I don't think. And it's certainly not useless transactions wise. Again, I can understand people not liking something, but I think it's a massive logical error to make statements like that when this thing objectively has profound user base and sponsorship. I mean, it's just the reality of it. If other entities shared that perspective, you wouldn't see Bitcoin like valued anywhere around here. So yeah, I don't buy it. I think, again, it could be cool it's completely fine if somebody doesn't like it, but I wouldn't confuse opinions and perceptions of stuff with like factual. And this factually is not useless. It's used by a ton of people. Eric says, ask Michael Saylor. Well, what does he say on it? Because if I'm not mistaken, I don't think he would say Saylor would call it a Ponzi scheme. And I don't think he would say it's useless as a transaction. Would he? I don't follow him closely. So I actually don't know what he postulates versus what he doesn't. I know that he's obviously a big Bitcoin proponent, but I don't know what he actually says. Lauren says, open trade thing. They say you can bring anything in trade for GameStop credit with a few exclusions. The exclusions were interesting. Oh yeah, we'll take a look at that. That's actually super, super weird. Eric says MSTR is toast. Let's see. I do think MSTR is going to come under pressure. I completely agree with that. And funny enough, when it comes to something like Bitcoin, I do not believe that Bitcoin is a Ponzi scheme, but I do think this thing is. At least esque. I want to be clear with my terminology. It's not directly a Ponzi scheme, technically speaking. But this thing, I do believe has way more in common with a Ponzi scheme than it doesn't. So yeah, this thing has been perverted for so long. The big thing here is that somebody like Saylor is going to do everything humanly in his power to make sure that this thing eventually, Bitcoin specifically, but I mean, it's down 70%. It's a big move, but like TQQ's moves more than that. So we're still not even really at like awful price levels yet. And the other thing to remember about MicroStrategy specifically is that it still does have a business. Now, quality of the business and what the business does, different conversation, but it does have a business. My guess is somebody like Saylor, I don't know what their balance sheet, what was their latest balance sheet? Let's take a quick look because I actually don't know. MSTR earnings release. Let's see what they got. Third quarter. I don't really care about the webinar. I just want to see. Do they have a deck? Here we go. Earnings presentation. Perfect. Let's see. I just want to see what they have for cash. So Bitcoin, they have 3.1%. Market cap doesn't matter. Their market cap is absolutely eviscerated as of right now, so that doesn't matter. Here's what we care about. Operating income is super unstable. Net income super unstable. EPS is kind of all over the map. I mean, I don't care about their Bitcoin per share. What is the yield? Incremental value generated through strategy, treasury, operations. Okay, got it. So this is how they're primarily generating. Has acquired additional Bitcoin every quarter. So they're slowing down as well. All right, let's see. Here we go. So they have $8 billion in debt. And a good bit of it is in the money, which is actually helpful to them. Their interest is not crazy. So this is actually really, this is really interesting because you could tell very clearly, obviously, like where their focus is and what their intent is. And right now with their general lending operations, they're able to generate a reasonable yield. The problem is a lot of this obviously has everything to do with Bitcoin going up, though. So the STRC, I mean, that's a fucking hell of a yield. 10.5. And they're making a decent amount in yield. I have to be honest. I'm not, again, I'm no massive fan of any of this kind of stuff, specifically with like Saylor and the way that he runs his business with this general approach. I do view it as a bit of a Ponzi scheme, but I will say their They're executing. But the other thing that we can logically assume is that they probably have a pretty robust game plan in place. Now, where that game plan ends, that's the real question. That's the real question. What I mean by that is this move is nasty. Not a good move. But if we look out longer term, again, like this isn't, oh shit, this isn't the first time Bitcoin has done something like this. So because of that, when you're creating risk management models, you don't make a risk management model based on like a nice scenario. You use the worst scenario you can find and then you amplify it. I don't think we would be at the level yet that we would be breaking any sort of risk management models that they might have. And if you look at the price performance of MSTR against something like GameStop, it actually, like this recent price behavior mirrors a lot of what you're seeing from Bitcoin. The interesting thing with respect to Bitcoin is the price levels that we're hitting. So I have a buddy out here in California. He actually helped me work on my house when I first moved into it, like 5 years ago. And he was a Marine, really, really good dude. And he and I keep in touch like once every great while, right? We're not like hitting each other up monthly, but it's whenever. And it's always great to chat with him. But he reached out asking about GameStop because he is a position where his basis is like in the fucking 40s. And what he was considering doing is taking a massive amount of capital and throwing it into GameStop at these levels to try and, you know, manage his basis and whatnot. So we had a really good conversation about like the pros and cons and, you know, whatnot around the thing you might be thinking of. And what I brought up during that conversation, though, is when you see GameStop right now, where if you look at its overall intrinsic value, again, there's like different numbers that you'll see thrown around, but with the cash that it has, it's like close to 1940 a share. And then you add the Bitcoin, it's like 2060. So we're like almost below like raw intrinsic value. Now, again, the reason why that can happen is because it's still like GameStop does have debt and overhead, which typically is integrated into that kind of assessment. But this seems really low. You can see like this 2055 handle was the last primary downside threshold that we drew before we had to explore a slightly longer term window to get some context on where the next might be. And you can see where I have that pinned at right now, which is like 1877. And the only reason for 1877 is because it's the last real volume node that we saw. And that seems low to me. That seems really low to me. The beautiful part, again, about GameStop at levels like this is for those that like the company long term, it's a really, really good entry. TCM says 5-year swaps, maybe. Wish we had more clarity. I don't think so. I honestly think the GameStop community would do themselves a massive, massive favor if you guys maintain awareness that swaps are a thing and they exist, but it's less of a focal point in terms of like analysis and price forecasting. It's just because it's not like we can see by measuring them that it really isn't predictive. The reason why we know that is because we can take a look at the swaps, see when the swaps are due, and then take a look at how price behaves. The important part when you do something like this, so you have a swap, is what you do not want to do is see that this swap comes on the 30th of Nov. And then the assumption is on the 30th of Nov, something has to happen because this swap is due. When we analyze this, the only way to actually analyze this rigorously is not to pick the instances where this swap was due at this point and saying like, oh, here, look, the swap made it move. It's not how you conduct an actual like rigorous scientific study. In order to do this, what we need to do is say, give me a list of GME swaps. All of them. Not one, all of them. All of their expirations. And then what we need to do is overlay these expirations with price behavior. We literally can do it right now together. Out of curiosity, I haven't done it in the last 3 months. So this will be net new for me, which I'm happy to take a look at. Let me grab, I need to find, if any of you guys have a quick reference for like recent GameStop swaps, I would love that. If not, I can find it really quick too. So recently expired GameStop swaps. All right. I see this. Let me see what this is. I don't know what this is. I'm looking for a list. If you guys have it, that would help. But if not, I'll keep looking for a few minutes until it gets too difficult. I thought for sure that there was a list. Let me just see. All right, so here's a swap DD. So maybe this one gives us links to, all right, here we go. No, that's them as the intermediary. So it doesn't even, I don't even see this aggregated yet. I see CFDs and I see different listings of swaps, but I don't actually see in aggregate. Let me take a look. Yeah, I don't see anything in the aggregate. Nada. All right, if you guys see it, let me know, but I'll walk you through at least what we would need to do. So the first thing is we would need to find a list of swaps. I know on Newton Sheet, and I think somebody new is maintaining Newton Sheet if I'm not mistaken, but I think on his sheet, he tracked some of the swaps, and that was one of the tricks with it, is that his sheet didn't track all the swaps. So the first thing we would need to do is actually find a comprehensive list of all the swaps. And then we would run just a general statistical analysis on it, which kind of useless to do it on the price without the swaps if the intent is to explore the swaps. But like I said, I haven't done it in like the last 3 months. But when I was looking at it way more closely before, especially when Newton and I were spending a lot of time talking about it, I did a very deep analysis of it and I didn't see anything. That doesn't mean that there still isn't a relationship, but there definitely wasn't anything that we could objectively say swap equals blank. Reggie says, I think Newton believed there were up to 15 swaps with varying lengths, 2, 3, and 5. Yeah, I think that sounds right. And I wouldn't be surprised if there's more, to be honest. Here's another swap DD. Yeah, okay, so where is he pulling this from? I can see somebody's pulling this somewhere. Look at these data points, basket swaps. Where is this from? I'll show you what I'm reading. This thing. Let me move this. I'm reading this. And in this is this. So I see these. I mean, we could literally run a quick analysis literally using just these. This is enough. It's not enough for us to be like ultra mega highly confident in the outcome, but we can literally just use what's here real quick and eyeball it. So let's do it. We have to do two things. First thing I need to do is get GameStop data, and we need to go back to 2022 is the earliest that I see. So let's do that. Let's grab GameStop data, and we don't have to go back super far. So I'm not going to go back to fucking, oops, or I am. I'm going to go back to 22. I'll download this. Wait. And then I'm going to drop this. What am I looking at? These prices look. What? Oh, these are fucking SPY. That's hilarious. I opened up, I think, the wrong file, and I saw a bunch of prices at fucking 655. Why is this saying SPY? Dude, GameStop. There we go. There we go. There we go. Okay. That was hilarious. I was just like, yo, what the hell is going on? All right. So what I did first, and I'll show you guys, is I grabbed price data first. So we have price data. This is daily going back to 22. And what I'm going to do next is overlay the swap expirations over here. So I'm going to move this out of the way so that I can see them. And then we'll build it together really quick. And I'm just going to include two data points, the expiration and then the notional. I think those are really what's mostly relevant. And then I'll just add like a swap count, so a swap number, so that we can track them a little easier. So then we'll have an expiry, and then we will have a notional. And I'll run through these really quick. So we have, this is going to be sorted by notional. The easiest way to do this would just be to download this as a PDF and then to extract it versus hand jamming all of it. We want to save it as a image. Yeah, cool. And then I'm going to open it in a PDF. I want to edit it. I want to open it. All right, let's just do it. No, I want to open you as a PDF. There. Okay. Dude, this thing is being super. For some reason, it's fucking literally misreading the file. So I'm not going to bother. I'm just going to hand jam it really quick. So 8 March 24. It won't take that long. So really, at least in this sample, there aren't a whole lot. So we'll be all right. And then the notional there is 31 million. This will be currency. Then we'll copy this format all the way down. Okay. We have our little structure set up, and I'll run through like 20 of them, because that'll be enough to give us a starting point. Hopefully there's 20. I think there is. So 25 March, 12 Feb, 24. That one is 30 mil. 4th is also 12 Feb, 24. That one's at 29 mil. Then I see 18 March, 24 again. That one is 29 mil. Then I see 8 Jan, 24. That one is 28 mil. Then I see 21 Sep, 22. That one's 27 mil. Next is 21 Sep. That one's 27 mil. See 3 June, 24. We're on number 9, in case you're wondering. 27 mil. And then 25 March, 24. 26 mil. 5 Feb, 24. 24 mil. 12. 8 March. 18 mil. 25 March. 24. 18 mil. 1 April, 22, 17 mil. 50 is 8 Jan, 24, 17 mil. Then 12 Feb, 24, almost done. 12 Feb, 24, 17 mil. And then I'll still talk about my position and stuff, but I just want to do this because there's a lot of conversations around swaps. And most importantly, I want to show you guys how to do this for yourselves. This is just the slow time consuming process. This is 17 mil again. And then we have 25 March, 24. That's number 19. That's 15 mil. And then number 20 is 3 June 24. And that one's 15 mil. My instinct is just to do the rest since we're pretty much through the whole list. 5 Feb 24 is 14 mil. 22 March 22, 12 mil. 8 Feb 23, 3 mil. 8 Feb again, 2 mil. 8 Feb again, 2 mil. 8 Feb again, 2 mil. 8 Feb one more time, 2 mil. 31 Jan 23, 2 mil. And then 8 Jan 24, 2 mil. Okay. Thank you for bearing with me, whoever made it through. Who made it through? Yeah, we had a massive attrition during that as expected. But I want to show you guys how to analyze this stuff. Okay. So all I did was first grab the stock data. The second thing I grabbed was the swap data. Now, the next thing we need to do is write a few formulas. So Reese says, IDK, what we're doing, but still here. Okay, thank you for bringing that up. I'll explain what we're doing. The purpose of this exercise is to show you, the individual people, when you hear all these conversations about swaps and swap impact on price. What I want to show you how to do is analyze objectively the impact of swaps on price. So what I did is I grabbed from the screenshot. I don't know where they grabbed this from, but I grabbed this screenshot. I've seen different versions of this before that include, GameStop to different degrees. Some of them are a basket with other stuff, but all of these include GameStop in some capacity. I grabbed all of them and their notional value. So what I'm going to do is create an analysis section here. And again, for the analysis section, I'm literally going to show you how to use AI in case you don't know how to do this. You literally can use AI to show you how to do this. So I'm going to squish this screen down, maybe to here. And then I'm going to grab Gemini. It's so funny. I have a really, really big screen. It's like almost 50 inches, but I have to like crunch it down to fit it so that you guys can see, which is kind of fun. So I'm going to give it information. So I'm going to say, well, first let's architect what we think we want to see. The first thing I think we want to see is the stock price behavior coming into the swap and then out of the swap. So this will be swap minus 20 days. This will give us a date. There's two ways, well, more than two, but there's a few ways to set this up. I'm going to set it up in a way that there's more columns than you really need to use, but all the data will be available. So we'll have 20 days, swap minus 20 days. This is your first date, and then this will be spot price, close. Then we'll have swap minus 10 days, spot price, close. Swap minus 5 days, spot price, close. Oops. What I'm going to do is use Gemini to help me create formulas. And what I want to do is write a formula here that first gives me the nearest trading day minus 20 period. The easiest way to set this up so that it can be copy and pasted is these become kind of headers. And then here, I literally just input numbers. So that'll be 20, 10, 5. Now, I haven't bothered doing the post swap move yet because we want to get this dialed in first. So here's what I'm going to tell Gemini. I'm zooming out so that you guys can see everything in one shot here, at least so far. I'm going to tell it in 04 in Google Sheets, cell 04. I want to calculate the trading day. I want to calculate a trading day before an input date given in L 4 to L. the input period is in O3. Example, in L3, the date is 8 March 24. I want to calculate 20 trading days prior to that expiry date. And let's see what we get. So it looks like it's doing an array, which is fine. I think it's kind of overdoing it a little bit in the way that it's writing it. Let's see. And then I'm actually going to open up another. Yeah, I figured this feels very overkill, what they did for what we want. So let's open up a new chat and we will do it with Grok. And let's see what Grok gives us. And then while we're at it, I'll do it with Chat GPT as well, just out of sheer curiosity. Because this doesn't really need to be the case. Yeah, this is way simpler. Returns dates before the expiration. How many dates exist before the expiry? Trading days. Pulls the specific date and days earlier. Okay, so this one's slightly mistaken it. I want it to calculate 20. I want to calculate the input period. I want to calculate the date based on the input period against the reference date in L. What it's doing is it was going to go through. Yeah, so this is exactly what it should be, which is literally just using a workday function. Sometimes I notice that Gemini can kind of go off the deep end when it doesn't need to. So now we just fact check this. Does 9 Feb align with 8 trading days before? And that seems like absolutely correct. So I just want to see, and it's good. So Grok also did a good job. Actually, Grok did a slightly better job because the other thing that it did is it automatically included the freeze for row 3, which this will allow us to drag it down, which is good because now all we do is copy and paste it off to the side. So clearly there's an error. What it's doing is it's switching the column from L, which we don't want. We need this to be locked. And then we want to be able to just obviously drag it down. These won't change. This one should change. So 10 days before 8 March, that looks correct. And then this one's 5 days before 8 March in terms of trading days. These all look correct. So the next thing I'm going to do is calculate in P4. Let me get rid of this one. And then I'll show you guys what Grok has given us. Again, the whole reason why I do this is so that if you don't know how to write formulas yourself, I am literally teaching you how to calculate. Jason says, I bet if you upload the actual spreadsheet, Gemini would do a better job. So the issue with that is it takes a lot of effort to actually make sure you can trust it, but we can absolutely do that as well. So what I'll do is at the end, I'll get rid of our stuff and then upload like these details, and then I'll have it do the same stuff and see how close they align. My guess is they won't align. And it's just because there's a lot of small little nuances and logical errors that end up being committed, but that's okay. So in P4, I now want to pull the corresponding closing price from F4 to F, matching the date input from O4 with the date in B4 to B. Now, one thing I need to do, because I've played this game enough times, is I need to make sure all of these dates are formatted the same. Even if it looks like a date and you would expect it to do the correct matching, it doesn't, which is kind of annoying. Excel is a little bit smarter in that way compared to this. So let's see what this gives us in B4 to B. So now all I'm doing is I'm having it create a formula for here that's going to look for this date in this column and then give me this response. So it's indexing F, which is good, and it's matching 04, which is this date, which is good, to B, which is this. So that looks correct. And then it's also giving me a cute little if error. So now we have our first trick. We need to find 9 Feb 24. Let's see if we can find that. So you see how some of these didn't update? This is the date issue. So I actually have dealt with this before. What I need to do is I need to update it in Excel before I pull it over. So all I'm going to do is go back to the base file really quick. And then I'm going to reformat the dates in here. And I want day, month, year like this. All I'm doing is copying that. And then I'm dropping it in here so that it should generally match. Okay, so this, we're looking for 15 Jan 24. Let's see what's up with that. So that looks like a trading holiday. This won't necessarily know about holidays. So there's an easy way to fix that with formulas, but it's also easy enough to just force fix this if you're so inclined. In this case, I'm going to see if it actually is able to find, that would be really, really cool, by the way. If it was actually able to find like calendars for this, that would be dope. So I'm going to try that first. I'm not expecting it to be able to do it, but it would be super cool if it could. Now, the other thing I'm doing is I'm just locking these different ranges so that when I copy and paste this over, it should give us some stuff. Okay. The other thing I notice is that it's like the same buckets across, which is actually kind of strange. Hey, that's my birthday. Let's take a look really quick at 20. No, let's not do that one. Same number a few times. 29 Jan, 4 March. All right, let's see how this works. So update the formula in O that is calculating the dates to ensure it's a trading day, which should exclude holiday where the market closed. I'm very curious if it'll be able to do that. If not, again, we can do it. What I'm going to do for the sake of this is just get rid of these from the data sample because it's not that many and it'll be faster to just not even fuck with them. But I am curious if it can do it, because that would be sick. So far, we literally have the backbone for what we need to do this analysis, because now what we're going to do is be able to change these formulas. You see how it's like minus the date? All we're going to do is change these formulas so that it becomes plus the date, and then we will be able to see how it behaved after the swap. Okay, so yeah, what this thing is doing is just creating a map of holidays for the given durations, which is completely fine. I'm literally just gonna exonerate these from the sample for now. If we run into a bunch of issues going forward and it gets rid of too much of the sample, then I'll change my mind. But right now, I'm not worried about that. So this will be the swap now plus 5 days. This will be 5. Now, funny enough, there's actually an even smarter way to do this, which is to automatically have this as plus and then make this a minus 20. Why would that change that though? Yeah, okay. All I'm doing is making it so that I can automatically copy and paste this no matter what. So that's going to be plus. And then this one plus. Cool. Now we'll literally be able to just do the same stuff, and we'll do plus 5 days, plus 10, plus 20. Do you guys want to do like a plus 1 day as well, like the day after the swap? This is easy enough to do, so let me know. Let me know what you guys want to do. I pick stuff that I think is generally relevant, but if you want to do like more incremental steps, we obviously can. It's at this point, it's literally just going to be copy and pasting, which is easy enough. It's not like any additional effort. I'll start here and then you guys can tell me what we want. So I'm just going to copy this. This should give me dates. This does give me dates. This should give me price. So this is going to match F with D. No, O. O. Ah, there's an error. This one shouldn't be locked. It's this that should be locked. That's a lie. I'm an idiot. None of that should be locked. So I need to be able to copy it over. Yeah, okay. That's more logical. Good. Let's see if all this stuff looks right. So this is looking at F, matching U. This should match U4. That's good. That's correct. Then this should match U3. That's correct. Cool. So these are good so far. Finn says, do you have any advice for someone aspiring into the field of ornithology cosplay? I'm a sucker for shit that I don't know. I'm an absolute sucker, so I gotta look that up. What the fuck is that? Ornithology. What is ornithology? Scientific study of birds. Okay. Ornithology cosplay. Let's see what you're in for. So it looks like you could be a pigeon. That's pretty sick. You could be a spirit walker. I think my best advice would be obviously be a peacock, because you gotta spread your wings. You gotta stretch your stuff. I think peacock or pigeon. Flamingos are kind of dumb. By the way, they're pink because of what they eat. I think the porg is also legit. So I would say porg, pigeon, or peacock. You don't want to be a seagull because those are kind of lame. Being like a raven would be sick, but that's taking it a little too serious. Yeah. It's a great life choice, I believe. That's awesome. All right. Let's see where we're at. So we have a mix of date not found. Let's see how many we would get rid of if there's a date not found in any of the columns. Just want to see how many we would end up having to get rid of before we go in and manually do it. It's looking like a little too many for me. Yeah, I say we go through. What's our sample count? 16? Yeah, I'm just going to go through really quick. Now, if I do something like this that's meant for overriding a formula that otherwise I'm trying to copy and paste, I will either add a comment with the formula so that I don't break it, because what I'm going to go through now is like manually change these. So what we need to do is find the closest date to 15 Jan 24, which I think was what, like 15 Jan, be the 16th. So these will be 16 Jan. And I'm just manually overriding. 16 Jan, 16 Jan. And then we have 19 Feb is our next one of 24. Let's go find that. 19 Feb would put us on the 20th of Feb. So 20 Feb. Oops. Okay. 19. These need to be minus. I was wondering. That made no fucking sense. So 25 Ds is our next for these three. So 25 Ds, 23. That puts us on 26 Ds. So one of the trends that I see right now is we literally could write a formula that automatically adds a day if we get a date not found. Again, don't care enough. Kind of running through this. Yeah, that's good. And then 1 Jan 24. 2 Jan. Jan. Then the last one here, we have 27 May 24. Or May, 28th May. Cool. Then we have 19 Feb. Yeah, that's okay. So 19 Feb was 20 Feb. This is 20 Feb. This is probably 16 Jan. Fuck, was that 24? Yeah. 16 Jan. 20 Feb. and 16 Jan. We are almost done, gang, with at least the structure for us to analyze this shit. So this will be, that all looks correct. WP, L14, 5 Feb. Yeah, that's good. So this will be 20 Feb, 16 April, 20 Feb 24. And then we only have one left. So 5 July 24. Cool. We have all our stuff. Now, the next thing that we're going to do is add some data analysis stuff. This is the last part. All we need to do is figure out the price behavior. So this will be minus 20 to expiry. And then in here, we're literally just going to take our spot price for minus 20. And then we're going to take, we need price on expiration date. So we need to take this, and I need price data for M. So this over in M4, I want the price from L to L. L, right? No, F. I'm an idiot. F to F. Matching the date from A with the date in B. These should all have a price just because this is based on a market expiration. So it should do, I mean, technically it should do the workday function for there. Yeah, so that's, are these all on a weekend? 8 March 24. No, there is absolutely a date. So what the fuck's the problem? Oh, wait, the formatting is the same. But now, what is this looking for? F matching K. That's why I fucking input the wrong thing. Matching L to B. There we go. Okay. We're back on that grind. Now we have what we need over here. So what I'm going to do is I'm going to take a look at the 20th, 20 days out, minus the spot price. For the spot price, I'm going to lock this so that it stays in M and so that we can track it. And let's make sure that this is correct. That's good. Now I should be able to copy and paste this to be 5 days in a second, but I'm going to do this also as a percentage. So this divided by this. Percent. So we have now the meat of what we're looking for. So that's 20 days into 20 days prior to expiration, coming into expiration, which I actually guessed that this is technically backwards. That's my bad. So this should be spot price minus 20 days, because this will be 20 days prior to that date. Did I have it that way already? I don't think so. All right. So now we have minus 10 days to expiry. So for this, we take our expiration date, spot price, minus spot price from 10 days here. Good. And then we do that as a percent. So this divided by this. Then I have to fix the other ones, the percentage on the other one. And this should be this divided by this. Okay. And then let's take a look at 5 days. Minus 5 to expiry. So that equals this minus this. And then we need that as a percent. And then these are all percent. Okay. So what we have so far in this wall of numbers is this is really the section that we care about. All we did is take a look at the price behavior, 20 days out, 5 days out, 5 days post, 10 days post, and then 20 days post. And now we can calculate how did this thing behave across those windows, and then we can create a little plot. So now it's just repeating this very quickly, but then doing now 20 days to expiry, and then we're going to want that as a percent. Then we're going to want 10 days post expiry, and then we're going to want that as a percent. And I guess I should actually reverse these. Yeah, it should be 5, and then 20. So that'll be 5, 10, and then this one, 20. So now we need the spot price following expiration. So we switch the order here to see how spot price does following. And then we need this divided by this. All of these will be a percent. $10 days, which is our 10-day spot, minus our starting point. And then we want this as a percentage. And then we have 20 days spot minus our starting point. Then we want this as a percent. This. All I'm doing now is formatting these. They should be. All right. So I hope you're excited. If you made it through, give yourself a pat on the back in the chat, because what you now have is a look into how these things, how stock price has behaved coming into a swap and then following the swap. And again, this is not for a massive data sample, so there has to be a bit of nuance applied to this. Now, what I would do to simplify this whole thing is I would actually make it so that we only look at unique dates, because there's multiple in here. So we can limit the total exercise that we're doing based on not having a bunch of duplicate dates, because the duplicate dates don't really matter, but we'll be able to do that effectively anyways. So first of all, any questions on what we've done so far before we get into the culmination of the last 40 hours of this rabbit hole that we randomly went down, but I am absolutely here for it because I think it's awesome. All good? All right. Our next task, and again, we can do this a couple different ways. TCM says, not really, but just no way to know if that's all the swaps. That could be 1%. You're absolutely correct. And that's exactly correct when it comes to understanding the sample. I actually know for a fact there's more swaps than this. This provides an initial look. And I would not take whatever we see here as like some sort of definitive solution. I really don't believe that that's the case at all. Now, what I'm going to do is add some more rows or columns, I should say. And what I want to do is grab unique stuff. So I want all of this, really all of this. I guess we could just literally do it from here. Do like a little quirky version. Actually, no, we'll duplicate it. There's really no reason. So I'm duplicating this sheet, and then I'm going to fix this section here, so that it's just unique dates. So it cuts our sample down, but then what I'm going to do is get rid of this, and you'll see it'll pull most of this stuff out. This stuff we can get rid of. This we can get rid of. And then we just have to fix the stuff that broke in this section, which is just these date not founds. So it's literally just these +1. Now, remember, we did hard code some of these in. So we got to make sure that those didn't get too broken. All I'm doing here is adding an additional date. 18 Jan something. Oh, okay. There we go. 26 Ds. 23 it's supposed to be. 26 Ds. 23. This should be 2 Jan. All I'm doing here is redoing this formula so that all of these are correct versus the dates that I raw pulled over. And then I'm just fixing them quickly by adding 1 to them. So this would be 2 Jan 24. Now what this is doing is just giving us an actual unique look. 20 Feb 24. 16 Jan 24. 20 Feb 24. 16 April 24. No, 16. 17. 18. Okay. 5 June or July 24. Cool. So now all of our stuff is fixed. Mike Well says, how do you know for a fact there are more swaps? How many swaps do you know of for sure? I don't know of a count, but I've like personally seen a list that's way larger than this, and you can look it up. I just don't know off the top of my head where they're grabbing it from. Otherwise, I would just do that with us. But yeah, I definitely have seen with my own eyes a larger list. Okay. So we're at a really cool spot now. We have the ability to plot the percent price change for these different terms: relative, swap, prior, in, post, expiration. Now, first thing we can see is that there's some anomalous periods, which we can immediately ballpark mentally when these periods might have been. The outliers themselves are of some level of interest, but moderate. The first thing I'm going to do is I'm copying and pasting these names just so that I can plot the percentages, but so that we have clear titling so it's easier for us to see what's going on. And we'll insert a chart. This is before doing any sort of actual correlation analysis. Let's take a look at a chart. Okay. So we're looking at price behavior pre and post, and we want to just take some guesses as to what seems to be predictable versus what isn't. And so far, we can see a couple things. We can see that this period was clearly very anomalous. And the interesting thing about this period is that this is 20 days out, 10 days out, 5 days out, that price is up massively. And then following, price contracted massively. That's interesting. But then as we eyeball the rest of this, like this is just kind of a mismatch of colors. It's kind of all over the place. And it becomes a little more difficult to come up with very, very clear trends. But from this window itself, there's actually some very interesting trends to me. And one of them is we can see in general, the 5-day post, 10-day post, and 20-day post is actually negative. Not always, but in general, it flips. So like this section, it clearly flipped on this date. This section clearly flipped. So we can see instances where it clearly is flipping. But in general, that's actually a very interesting data point to me. Now, we can take a look. These are all based on those individual dates, just to make the dates a little clearer to the eyes. So now what we can do is finish with a correlation analysis. And we can say to ourselves, based on this data sample, how predictive is these different price levels and the swaps on the following price? And that'll be your homework. In order to do that, I'll give you the exact prompt you need to use. You need to ask some sort of AI, Grok, whatever. I would avoid Gemini with this just because, again, it tends to be a little bit quirky. And I would say, based on the data from AC, and I would get rid of the dollars from it just to make it easier. You don't need the dollars. You really just need the percents from here. And I would say, based on the data from this section, I want to analyze the correlation between swap date from L with price performance, again, from this section. So to simplify that, an easy way to do that is hard code this in, which isn't, I'm not going to hard code it in because that's like against my religion. I'll show you instead. I'll hard code this one over here. And by hard coding this one, I'm just going to get rid of the dollars because we don't care about them. Cool. So now you have the actual data that you need in the correct section. fuck? Because this ultimately is what matters. The dollar piece was just breaking out how we're calculating it. It doesn't actually matter at all. So that's the next step. You literally can take this. So you can take a screenshot of what I did and run the next piece for yourself. If you find something or if you get stuck, you can hit me up in our Discord so that I can walk you through it. But as soon as we get off the stream, I'm going to do it myself, so I'll have the answer. But I think it's a good exercise for you guys. So it's a little bit of a cliffhanger. I edged you all a little bit. You already have a visual analysis, but now you need to complete the analysis to get the last endpoint here. Any questions on anything that we covered or anything related to this before I quickly talk about my position as promised, which, fun fact, I don't actually think it's changed. I'll take a look really quick. I made a couple trades on 4 Nov and I bought shares on 11 Nov. On 11 November, I bought 100 shares. So that takes the total GameStop position, which right now has an allocation of 25 grand. It takes me to 400 shares at 22.47. And then right now I have 5 puts out in 19 Ds at the 22. So the same thing there. And then I'm short 4 calls at the 24 strike in 19 Ds. This is one of those less common instances where I'm at a 1-to-1 ratio. And it's really designed to be very temporary. But it's because of the price behavior and it's really trading that broader down move. So those calls are actually, I mean, I can take them down now. I've been in the trade for 18 days, but those would be sitting in a pretty healthy profit at this point. But when I see GameStop behaving as it is, I play the coverage strangle a little more defensively. And it's literally just to give me a better opportunity in order to make money while the underlying is struggling. So for context, my coverage strangle right now in the course of, let's say, 2025, I am outperforming GameStop by 56% now. GameStop at the start of the year was 31.84. It's down 36.75% from that point. And the allocation that I have is up 19.9%. So we're literally outperforming it by 56% over the reference time frame. That's the cool part of the coverage strangle. So if I had bought on the first of the year and just kind of held or, really didn't do anything, I would be down fair. But because of the coverage strangle and because of trading around it, not only am I not down, but I'm actually making a decent amount of money. If you think of that total allocation compared to the market this year, that position, my coverage strangle in GameStop, something that's gone down 36% from the start of the year, is outperforming the market to the upside. The stock market as a whole right now is up 11.82%. As I said, that allocation is up 19%. So that one thing is literally outperforming the market, even though the underlying that I'm trading it in is down 36%. That is literally the power of understanding how to trade derivatives in a nutshell. That's one of the reasons why I do these, is to help expose people to new information. You should always do whatever is right for you, but you should know stuff like that exists because, let's be honest, it's pretty fucking sweet. Any questions on the position or anything like that before I sign off for the evening? I also got to figure out what our dinner plan is. Mel hit me up like 25 minutes ago asking about dinner. Reese says, when you use 25 allocation, does that mean total market, not margin? I don't even think GME is marginable, but in general, that's cash secured. So what that means is in my actual account, it's a larger position, but this is part of like the sample covered strangles that I've been sharing with you guys. So all I did was scale it linearly from the size of my account into the correct allocation for the sample portfolio. And in this context, what I'm doing is taking a set amount of capital and I'm setting it aside to trade a covered strangle in GameStop. So what that looks like in the long term is I don't always use $25,000. I actually rarely use all of the money. More often than not, I have some cash aside to do other things, but I still assess my returns based on that entire allocation because it's money that is dedicated to trading this. So for example, right now I'm 79.95% utilized. 36% of that is in stock. 44% of that is in cash secured puts. So for example, on those cash secured puts, the cash secured amount to hold those right now is like 11 grand. That 11 grand is earmarked and set aside for the specific position, even though technically I don't think they're cash secured. I think you can trade those on margin, at least for the short puts, but I don't. Brain says, how big is your GME position relative to your portfolio? Well, we can see that at scale here. So in terms of the total, in terms of the covered strangle allocation of the portfolio, it's a little under 10%. It's like 9% of the portfolio. So it's actually, funny enough, one of my larger individual stock holdings. But also to be clear, that's largely just because I got involved in the GameStop community and wanted to participate. That's not like some sort of endorsement, but I'm obviously very comfortable trading it and I can generate a lot of money from it. So I'm still, that's why it's at that number. But that's what it multiplies out into the main portfolio. In the sample portfolio, it's obviously the same percentage. I purposefully scale it down. I was actually talking about it in the Discord. I might not do that going forward just because it takes a little bit of effort to scale it out, but we'll see. All right. That wraps me up. Hope this session was useful. You have some homework. Your homework is to follow up with me in Discord, as a comment on the video, literally wherever you want to communicate with me. But what I want you to be able to tell me is, what is the correlation between swap expiration date and impact to price? What we've just done is isolate the swap piece. The next thing that you need to do is build this out using non-swap data. So you need to take 20 days, 10 days, 5 days before, 5, 10, 20 from random days, not from swap days. So you literally create 3 or 4 different versions of this that are just completely random days. And then you can test how correlated is the swap to price performance compared to that series of just completely random days. It's not just about if the stock goes up or down in this small basket. You need to compare it, and that's how you compare it. As always, if you have any questions, let me know. Be an outlier, be an ape. See you guys later.